Yes, we're going to do another one of my favorite videos. How much of one stock do you need to own to earn $1,000 a month in dividends? Hi guys, welcome back, and today, yes, we're going to have a look at another very similar video I did the other day, but we're going to do it on a grander scale. We're going to look at how much of one particular stock you need to own to earn $1,000 a month in dividends. Now these are some of my favorite videos to do, because that's the whole reason we do this in the first place, being dividend investors, is to earn that income and invest in stocks that pay that income. So very excited to get into this one and do a very similar video as before, but on a much grander scale. And hopefully this could be a bit of inspiration for you and a bit of a target for probably a lot of people watching this, to get themselves into this sort of position where you can earn up to $1,000 or more a month in dividend payments. Go and check out my last video, which I'll tag in the top there in the card, which was how much of one particular stock do you need to own to earn $100 a month. So this one's going to be a bit different and just that video on steroids, I guess. And we're going to use a slightly different company as well, which will have a slightly different result for the worse, unfortunately. So this company today we're going to use is been in the news recently, and I felt it was quite apt to use this particular company, and that's Pfizer. We're going to go into Pfizer shares and look at how many we need to own to earn our $1,000 per month in dividends. And then we're also going to look at my portfolio. We'll go into my dividend tracker and look actually at one of my highest yielding positions, apply the same equation to that, and look at the outcome. So we're going to play around with my dividend tracker as well a little bit and just go through a couple of the features. I'm not subscribed to it, so I don't have a premium package, which costs $5.99 I think. So I haven't got a lot of the features, but I've got quite an interesting feature in there, and it'd be quite good to look at my portfolio allocation in the different sectors, which I started doing myself on just a Google Sheets in a graph, but I haven't kept it up to date. But as soon as I update this dividend tracker, it does it for me, which is a superb feature, and I really like that. I'm going to quickly give you a real brief breakdown of the equation we're going to use, just in case you don't want to go any further in the video and you just want the equation that you'd use to work this out, and then you can apply it to any stock that you might want to apply it to. So you take your $1,000 per month, obviously. You'd then times that by 12 to get your yearly income, obviously. So that's $12,000 a year. Then you're going to take your annual dividend payout amount for that particular position, and you're going to divide that $12,000 as a monetary figure by that annual payout for one individual share. That'll give you a figure. That figure you then need to times by the share amount and how much the share costs, and that gives you your magic number of what you need to be investing into that particular stock to therefore get your $1,000 per month. So let's do the calculations. We're going to do them on the computer, actually, a bit easier because I'll have a calculator on there, and then I can show you track your dividends as well, and we'll look at the features on there. So let's get into it.
As always, we start with the portfolio. So here it is. Here's the portfolio, 47,600. We've got a bit of funds to deal with, £468 to play with at the moment, and my profit and loss is 3,276 up. So I'm running at 7.4% up. Now, bear in mind, I started trading late last year, September, October last year, I think, not trading, investing. And to be, with everything that's gone on and how the market's reacted more recently, to be 7.46% up is quite astonishing. So I'm very pleased with that, and most of that was just due to finding some good quality stock, good quality companies, and investing in them when they were cheap, when they were on offer, when they were discounted. So this is the portfolio. I have got Pfizer shares, which is the company we're going to use. Here we are. It's been all over the place, but a good solid dividend company. So I currently own 66 shares in Pfizer, and I think my next dividend coming in from Pfizer will be in the region of about £20 to £25, which is lovely. And actually, it's a reasonable sized position here with Pfizer, $2,300 to nearly $2,400 worth of Pfizer. So anyway, let's do the calculations.
Right, just quickly need to explain, this looks very different. It's the next day. I had a video out which had the wrong calculation on it. A gentleman by the name of Chris pointed out to me. Very nice of you, thank you, Chris. So going to get the new video done now and back out, so that's why it looks different. But let's just carry on as if nothing had happened. So this is Pfizer. So we've got a 10-year dividend yield and growth there, which is fantastic. They pay quarterly. An increase of 6.72% over 5 years, which is an increase, which is good. It's not amazing, but it's an increase. 52.55% payout ratio, which is really good. The sweet spot's really 60% there, so 52 is pretty good. The yield is 4.14, so quite a healthy yield, and the annual payout is $1.52. I was looking at the quarterly amount there when I did it before, so we're going to work on $1.52. So let's get the calculator up and we'll do that right now. So let's explain in real time. So you're looking for $1,000 a month. You want to times that by 12 to get you $12,000 per year. What you then need to do is find out how many shares you then need. So you're going to divide that by the $1.52 payout. That brings you to 789, and let's round it up, 7895. Let's keep that a bit cleaner. It's quite nice having it a little bit cleaner. Then what we're then going to do, that's the number of shares you need to get up to that $1,000 a month, 12,000 a year. So we're going to times that by Pfizer's current price, which is $36.70. This is going to be the magic number for getting to that $1,000 a month, 12,000 a year. You need just shy of $300,000, so $289,746, which is much better than when I did it before and worked on the quarterly amount, for obvious reasons. We were well over $1 million. So $289,746 to get to that $1,000 a month just in Pfizer. So that's not too bad at all. That's not too bad at all. It's a lot of money, yes. That's not too bad at all. So I'm going to go into another company. I'm going to clear this off completely. I'm going to go into a completely another company, which means we're going to go into track your dividends to do it.
So this is Track Your Dividends, which gives you a good overview of your portfolio. If you fill it all out, this is the free version, not the paid version, the premium, the $5.99 a month one. This is just the basics. I haven't got access to a lot of the features on here, but the features I want and need, I do have access to. If I need any more features, I like the stock analysis and stock popularity down here, things like that. I use Seeking Alpha anyway. So Track Your Dividends is literally just to track my dividends. Pleasing the title, I know. So this is my portfolio, $48,594. So this is dollars. There's also some positions that aren't in here, including the UK stocks that I own, because they don't support UK stocks, and I've got some quite hefty positions in things like EasyJet, or not EasyJet, that's not hefty, £2,600 in Vodafone. I've got Legal and General, £1,800. So STM Group, terrible position that, and HSBC at $1,500. So I've got some more positions in my portfolio that don't appear in Track Your Dividends. Hopefully at some point they'll update it and support UK stocks as well. So I'm going to go and have a look at the portfolio. So it gives you an overview of all your positions in alphabetical order to begin with. But this is a great feature here. You've got these tabs at the top and you can organize your portfolio via alphabetically, the number of shares you own, the price they're at, profit and loss, the yield, and things like that, which is great. So if I'm looking at this as a dividend investor, I can click on dividend yield and look at all the stocks that are not currently paying me a dividend and go, right, Disney's cut their dividend, Carnival Cruises has cut their dividend, Boeing has cut their dividend, so, and I'm up in this, so I could sell out of that, I could sell out of that, and then I could reinvest that capital back into dividend payers. So a great feature to be able to organise your portfolio. But let's do that the other way and look at the highest dividend yield. So on cost, when I bought it, I only had a 12% dividend. I say only, that's massive, I know. Geo Group, the Geo Group is a REIT, so we'll have a look at that in Seeking Alpha in a minute. But we've got a current dividend yield because the price has gone down since everything going on. got a current dividend yield of 14.39%, which is massive. So let's quickly apply this same calculation to the Geo Group.
So here we are in the Geo Group. We're going to go through how much, again, the next day you would need to invest into the Geo Group to get your $1,000 per month. So they haven't grown their dividend at all this year, which is why that's on zero. They have grown it by 10% in the last 5 years, which is pretty good, and they've got a 72% payout ratio, which is very good for a REIT actually. We've got a very similar annual payout for each share that you purchase, but each share is worth far less than Pfizer, which means your yield, percentage yield, is much bigger. So let's do the same calculation on this one. So we will take your $1,000 a month equals 12,000 for the year. We're then going to divide to get probably a very similar figure by the annual payout rate, which is $1.36. So you need 8,823. And again, let's round that up, 8824, much cleaner. So you need 8,824 shares of the Geo Group to get you $1,000 per month, 12,000 a year. But you're buying them at far less money, so it's obviously going to come out at a lesser value. So we're now going to times that by the share amount. So you need that many shares, but the shares cost this much, 83,386. So that for a lot of people is far more obtainable, 83,386. There'll be a lot of people possibly watching this that are very close to getting that, or have got that much in their portfolio already, but they've got them in much lower yielding stocks and shares, much safer stocks and shares. I don't think the Geo Group, and certainly the Dividend, is going to be all that safe, I would have thought. If you're going to get into either company, you know, Pfizer is going to be the safer option. Geo Group is not. So there's lots of higher yielding stocks and shares out there, so you can diversify your portfolio, but certainly not up to the 14% mark. I mean, that's monstrous. But I wanted to compare the two, get Pfizer out because it's obviously very topical at the moment, and it's got a reasonable yield for just over 4%, and it's a good dividend stock. And I just wanted to compare it to a much higher yielding company, and the highest yielding company I had in my portfolio, which is the Geo Group. Let me know down below what your thoughts are on the Geo Group and how safe you think it is. Another feature of Track Your Dividends is actually the dividend safety score. They work out and compare a lot of different aspects of a dividend together and give you a safety score. That's part of the premium package. I don't have that. You can probably get onto Seeking Alpha and work out for yourself how safe a dividend is based on payout ratio, growth rate, its net asset value for the company, and how healthy the company is as a whole. But aside from all that, Track Your Dividends does it for you. So you can pay for the premium package and they'll give you a dividend safety score. If you have got Track Your Dividends, I'd love to hear what the Geo Group is safety score wise. So if you're watching this and you've got Track Your Dividends, and you can look at what the dividend safety score is for the Geo Group, do let me know in the comments below, because it's probably in the 20s or 30s, I would have thought. Pfizer, I imagine, is up in the 60s and 70s at a guess. So that's another great feature of Track Your Dividends, and there's another great feature that I want to get into now.
So let's get rid of that. Don't need that anymore. Let me show you one of the features I really like in Track Your Dividends. I've been saying that wrong the whole time, I apologise. Track Your Dividends, not My Dividend Tracker. So one of the main features here that I really like is go into the diversification tab and go default portfolio, which is the one that obviously you just put in there, and I can rename that if I wanted to. Do I need to? No. Is it a complete waste of time to rename that? Absolutely. I'm just going to keep it as default portfolio. I know it's default portfolio, it's not a problem at all. You may want to rename that something very nice and pretty to organise your bits. I'm not going to. I can't be bothered. There's no point. So dividend portfolio. So this is a really lovely way of looking at your portfolio and looking at how diverse you are. Now there is 11 sectors of the stock market. 12, I think it's 11. And it would be a good idea, you don't have to. If you're confident on certain sectors, then there's no need. If you're confident in certain companies, there's no need. But it's a good idea for safety. Diversify your money across as many of the 11 sectors as you can, really. Therefore, if something like real estate is suddenly not doing very well, but the energy sector is performing very well, as is industrials, you've got a bit of coverage from the ones that are doing well, then the ones that are doing bad. I've been over diversifying quite a lot. It's wise to do it. It's not a complete necessity. If you're very good at what you're doing, investing in certain stocks and sectors, then there's no need. But this gives you a good overview of my diversification throughout my portfolio. And the ones I really like looking at is sort of the highest and lowest sector allocation, really. So you can see here that in the ETF sector, we've got the highest amount of money really in the ETF sector, which again further diversifies your money. So you can see how much I like to diversify, and I like to think quite a diverse portfolio. The lowest sector, consumer discretionary. At the moment, I'm not big on getting into consumer discretionary because of the way things are. I think the way the world is at the moment, people are consuming discretionary things and items less and less. Consumer staples, yeah, absolutely. Get into consumer staples because they're necessities, people will always need them. But consumer discretionary, people are going to be using less and less in this sort of market, and that's why I wanted to keep that, or I haven't been investing in that sector. But ETFs obviously diversify your money for you, so that's a very good sector to be getting into. So the keen-eyed viewers amongst you might have noticed that I'm only in 32 stocks. That obviously doesn't include the UK ones as well. Plus, I need to just double check this because this might not be 100% up to date because I've bought and sold a couple of bits and pieces recently. Sectors invested 10, so out of the 11 sectors, that's doing pretty well. I think materials is the one that I'm not in anything at the moment. Another nice tab on here is just stock diversification, so you can see I'm not fully overloaded in one particular stock. I've got some that are tiny, like if you can see there, Carnival, and I've got other stocks that I'm loaded on like AGNC, PTY, which is an income fund, and AT&T, one of my favourites, so I'm loaded on those. These bigger ones are the index funds, so they'll always be higher, I think, because I just will constantly drip into those. But that gives you an overview of the individual stocks that you're in as well as the sector diversification, and that's a completely free feature on Track Your Dividends. These ones, like stock analysis, it will come up with a message saying you need to subscribe at $5.99 a month or 60 months for the year with 2 months free. So I don't have the premium dashboard in Track Your Dividends. I follow a lot of people on YouTube that have, and it looks very good, but I'm just not going to be investing in that just yet. But you can see here that we've got sector diversification and stock diversification as a free feature, which is really good. So that's it. Just wanted to apply that to Pfizer, the calculations, and the whole premise of the video to Pfizer and the Geo Group, just for a bit of a laugh. So I'll throw you back out there.
Well, there we are. Wasn't that awfully exciting and interesting for you all? No, probably not. And a bit long-winded, but I thought it was quite interesting to show you that. That's exactly the figure you need to be earning your $1,000 per month in both Pfizer, very topical, and in the Geo Group, which is obviously a much higher yielding company at the moment. I should quickly say I don't suggest you go into either of these companies. If you're going to go into one of them, I'd go into Pfizer, but you need to be doing your own homework and making your own decisions as to whether you want to be going into these companies or not relying on me. So I hope you enjoyed that, guys. Please subscribe to the channel if you haven't already, and if you're enjoying the content and if you're enjoying the videos, I'm slowly but surely ramping the production quality up ever so slightly. Hopefully this one is a little bit better than the last because I have the new phone which is filming in 4K, so ramping things up a little bit by bit. So I hope you really enjoyed the video and you're getting value from them as well. Give it a little like, smash the like button, press the like button, do whatever you want to do with the like button, because that obviously really helps the video get out there and helps to sort of spread the message I'm trying to spread with the channel as well. And pop a comment down below what company you'd get into for nice safe $1,000 a month income, and how much that would cost you. It'd be really interesting to hear, and then we'll have a conversation about it. So I hope you really enjoyed the video, guys, and I'll catch you guys in the next one. See you later.